Wasserman, and I'm the manager of the Geneva Master in Finance program offered by the University of Geneva by Jeffrey, the Geneva Finance Research Institute, which is the part of the university that specializes in finance, both research and education. And I'm really pleased to take part in this event today. And I would like to thank UNITAR for initiating and organizing this important and interesting conference. I really look forward to a thought-provoking discussion this morning. And I would like to start with 3 short questions that you will soon see as Zoom polls on your screens. So Judith will help me with that. Perfect. So we can see the first question. How many times have you visited a bank branch within the last 2 years? So either not at all up to 2 times, between 3 to 5 times, or more than 5 times. Okay, so now perhaps we can share the outcomes, the results.
My apologies, but we need to relaunch it, yes, because they couldn't see the questions below, I think. So please vote again, and we'll end the poll in 20 seconds.
Mm-hmm. Okay, so thank you very much, Judith, for your help. So let's see, firstly, how many times have you visited a bank branch within the last 2 years? So the biggest part of us visited more than 5 times. We then have 36% of us that either did not visit a bank at all or 1 or 2 times. And then we have those who visited between 3 to 5 times, which constitutes 19%. The second question on which you have just answered, and thank you very much for your participation, is do you use your mobile phone or the internet to make payments? So the majority of you regularly use your mobile phones and the internet, and very few of you never use it, just 8%, and we have 17% that use it occasionally, sometimes. Let's see the last question, question number 3. Have you borrowed any money within the past 5 years? So 47%, or nearly half, haven't borrowed any money within the last 5 years. And those who have borrowed, so the biggest part were using financial institutions such as banks or credit cards. We then have 20% that borrowed from a friend or family. And we have 4% that were using peer-to-peer online platforms. So we can now close these polls. Thank you very much for this very interesting information. These are some of the topics that we are now going to discuss. And let me just close this. Perfect. So within the next 15 minutes, firstly, we will see some of the recent trends in fintech. We will discuss what opportunities they open for us, and we will try to figure out, are there any risks involved in them? What is fintech? Fintech is actually the confluence of financial innovation and technological innovation in facilitating banking and financial services. And I would like to start with a very big drama that happened a couple of months ago in January, where the star was actually the stock of a company called GameStop. GameStop is a retailer which has shops selling video games and electronics. It was founded in the 80s, and then it was really successful. Things went well. However, over time, people stopped going to shops to buy for those products and started buying them online. As a result, over the last 6 years, the company has generated losses and the price of the stock went down. However, this last January, we saw something very, very interesting which happened to the stock of this company without the company doing actually anything to justify that. So suddenly, as you can see here in the graph, the stock price significantly increased from $18 to $483 at some point. And this increase was mostly a result of the activity, of trading activity of young individual traders, what we call retail investors, that were using some financial technology called Robinhood. Robinhood is a free trading app for mobile phones that helped them actually buy and sell stocks and as well as other financial securities at any time, wherever they are. And that resulted in this increase. What also helped is actually some social media platform called Reddit, in which they actually can, there are millions of members in this Reddit, and through which they actually exchange information and opinions about stocks and about other investments. As a result of this increase, several hedge funds that are considered to be like the most sophisticated financial institutions actually lost lots of money. One of them, Melvin Capital, lost half of its capital, equivalent to $7 billion. And what we actually see here is an example in which financial technology is shifting power from the big traditional institutions, such as hedge funds, banks, and other investment companies, to individual investors. And the thing is that the thing is much wider than that. Today, we can see the evolution of financial markets with many other financial technologies that result in also the decentralization of finance, a shift of power from the big institutions towards individuals. Let's speak for a second about peer-to-peer lending. Okay, so peer-to-peer lending, what is peer-to-peer lending? These are online platforms that match lenders and borrowers, without the traditional financial intermediaries. Today, we have in the world 1.7 billion adults, which constitute 31%, that are completely unbanked, and we have even more that are underbanked. Unbanked means that they don't have they don't have bank accounts. So you can understand that in specific regions, the percentage is even much higher. For example, in Africa and the Middle East, more than half of the adults do not have bank accounts at all. So what does it mean? What it means is that if, for example, let's say that I'm a small entrepreneur or a small business, and let's say that I have some interesting business idea. To launch my business, I need to get some funds. Now, if I'm unbanked, I don't have a bank account. And why is that? It's because of the fixed cost for the bank. The income from me could not justify the fixed cost that I'm causing them. I'm too small for them. In that case, if I still need the funds, I might use credit, and credit is very, very expensive. It might be more costly than the outcome, and eventually make me give up my idea and completely abandon my project. However, if I now have I have options such as peer-to-peer lending, that could be a very, very interesting thing for me, because I might find a lender that might lend me money without the margin that the bank takes. That will make it cheaper. And eventually, thanks to that, I might launch my project. And similar to the peer-to-peer lending, we have more such technologies, such as peer-to-peer Forex. So we are currently located here in Geneva. Let's say that I'm a Swiss company that needs to buy American dollars to pay my supplier in the United States. So until recently, to do that, I had to go to my bank, and then the bank has its margin, like the bid-ask spread, and commissions and fees that I had to pay. And it's even more so when it comes to exotic currencies. Today, this is not necessarily the case. I could do the same thing on an internet platform without all these commissions and fees and intermediaries. We also have peer-to-peer online payments such as PayPal. We have crowdfunding. So whenever, let's say that I want to open a little restaurant, I can go like Via Piano. We have here an Italian chain of restaurants here in Geneva. So they just go to the public, to the clients. Each one is giving 100 francs. Well, franc is like an American dollar. 500 francs, and that will enable them to open another restaurant. We have cryptocurrencies. So currently, these are the central banks that control the currencies in the world. This might be changing now with cryptocurrencies and blockchain. Fractional shares. So as you might know, here in Switzerland, we really like chocolate, and we have Lindt that produces excellent chocolate. But let's say that I want to buy a stock of Lindt. So, well, the cheapest is 8,000 franc. Again, it's like dollars, but they also have stocks for 80,000. In the past, in order to invest in such a stock, I really had to do it through, for example, a mutual fund that pools the resources of many small investors and invest them for them. Today, I do not depend on a mutual fund anymore. I can just do it by myself online. We have robo-advisors that to some extent replace private banking, those beautiful offices with mortar and bricks that are so expensive. When we do it online, things are much cheaper. We have digital banking. So we have Revolut and Monzo, again, mitigating all those bid spread, not all, but to some extent, the bid spread asks and the fees and commissions, making things much more accessible. And we have also mentioned Robinhood. So we have more such mobile trading apps like eToro, and we have other in other countries. And the thing is that what actually enabled those technologies to develop recently are the technologies that were not available before that. So if you think we now have strong computers, we have safer cybersecurity we can rely on, which is necessary for all of these. We have 4 and 5G networks. We have performing mobile phones. We have fast internet. I have already mentioned the important role that social media plays in those kind of things to deliver information, to share information. And Judith also mentioned the pandemic, which also definitely played an important role here. Firstly, because, well, young people that are main players here had more free time. They didn't have the gym, they didn't have restaurants, less social interaction, and therefore they became clients of those innovations. And also because of the need to further develop and enhance them further due to lack of social contacts. And indeed, these technologies have many benefits, as my colleagues here have mentioned in the keynote in the keynotes before I started. So we have already understood, that many of the transaction costs are actually mitigated by those technologies. So less bid-ask spreads, less margins, and so on. We have more transparency without some of those intermediaries in the middle. Things are going much faster. So if you use Robinhood, you can trade stocks much faster compared with the old traditional ways that we used to have. You just use your phone. And these eventually enable many disadvantaged and other populations take part in that, therefore increasing financial inclusion, reducing inequality, and allow for more investment opportunities. These eventually mean higher economic growth, which is so important for all of us. Having said that, indeed, there are lots of interesting and important benefits. However, we might ask ourselves whether there are some risks involved. And to do that, I would like to take one step back and have a historical perspective of the relationship between financial innovation and deregulation on one hand and financial crisis. So firstly, what are financial crises? Financial crises are major disruption in financial markets that are typically associated with sharp decrease in asset prices and are very damaging for the real economy. That means lower economic growth and unemployment. And if we look over history, humans have always attracted to stories, to innovation. They have always tried to see, oh, there is something new here. Maybe I can generate a profit from that. Starting in the 17th century with the tulipomania. So back then the tulips were innovative. They were introduced to Europe for the first time by the Ottoman Empire, gaining lots of popularity. Many people bought them. Back then the financial center was the Netherlands. So a bubble formed, eventually burst. And a similar pattern we can see in 2001 with the dot-com crisis. So the assets underlying these crises were actually dot-com companies or internet companies. Many of them did not even have an appropriate business model, not to mention profits. And still people bought them because they were innovative, they were interesting. And then recently in 2007 and 8, we had the mortgage-backed securities, those derivative assets that were so interesting. And again, we had a bubble that burst. All of those bubbles are typically accompanied by high financial leverage that always magnifies the disaster. So this is one type of financial crisis. You can also think now about Bitcoin. Maybe this is also a bubble. And we have another type of financial crisis that are associated with deregulation and disintermediation. One of them we could see in 1994 in Mexico. So back then the peso was allowed to float freely, resulting in a sharp devaluation of the currency that spread to other Latin America in what is known as the tequila effect. Then during the 80s, there was also a big crisis, the saving and loan crisis in the United States. So back then the thrift, a new innovative financial intermediaries were introduced for the first time. They gave loans, such as mortgages to the people. And in fact, they had the capabilities just like the big commercial banks, but they were not equally regulated. And that ended up in tears as well. So a third of them actually went bankrupt, generating huge losses, like more than 1,000 of them went bankrupt. And the thing is that, over history, lots of things change. Technology changes, political regime change, and even the height of people change, but some patterns remain the same. And we have always had financial crises and always will have them, on average, every 10 years. In many cases, they are associated with financial innovation and deregulation. And that brings me indeed to financial inclusion, which actually suggests that fintech alone is not enough to increase financial inclusion. Indeed, to enable people really benefit from those digital financial services, we should pay attention also to, for example, regulation, like Judith suggested before, because indeed those financial intermediaries indeed make things more costly, right? But there was a reason why they were put in place in the first place. They still play a very important role. And of course, it's very challenging because by the definition of innovation, we don't really know it. It's always something new, and it's more difficult to understand what are the risks, to measure them, and to design the policy accordingly and regulation accordingly. Judith also mentioned infrastructure, that of course that it is so important. So indeed today, there are some regions in which people do not have enough food to eat, but they still have mobile phones that are necessary to harness these innovations. And indeed, infrastructure is very important. Good internet, cybersecurity is also very important. And indeed, another thing that Judith mentioned is indeed lifelong learning and skills. And here it's really, really important that financial services are tailored to the needs of disadvantaged groups when it comes to literacy and numeracy skills. And I would really like to take this opportunity to really welcome the initiative by UNITAR to develop this wonderful and interesting and important digital finance program. So now I would just like to conclude. So indeed, the fintech really opens very important opportunities for all of us. However, it could not just be by itself. We should also pay attention to the risks involved and make what is necessary to mitigate the potential damage. So thank you very much for your participation and comprehension.